Hello everyone, welcome to new weekly market update. Last week, US stocks were mixed. Dow and Russell 2000 hit record highs, but tech-heavy Nasdaq fell.
Over here, look at me. European Asian markets actually found optimism because of interest rate cuts, and they actually went into action. As anticipated, gold traced early week, and by the interest rate coming, gold skyrocketed, reaching its all-time high. Then it a little bit retraced by the week trading ending. Let's see how that's looking on charts. All right, guys, welcome back to the Wealth Attempt to Become Wealthy series. Just kidding. Here's gold. So as we had highlighted and anticipated in the past week, it had exactly did what we spoken. We had this ascending triangle coming and market broke above it. And also the interest rate actually has been reduced. It's been cut. It's now 3.75 minimum. And this is what caused the push in gold to reach almost all-time highs. And we saw by late this week, we saw a retracement to support. Now market is inside the middle of support and all-time resistance. And guess what happens? So here we have a strong bearish candle. Although gold is very bullish, but in order for gold to break above such a strong resistance, it might attempt to take liquidity. So here's what you want to keep an eye on, all right? There's a good possibility market will retrace to this support and attempt to break above it, right? But what is also more likely to happen, so if you want to enter as a long position on gold, you could aim for the support, but you need a solid confirmation, all right? Get a solid confirmation. Otherwise, gold might attempt to go and liquidate all these lows. Why? Because it needs fuel, right? And if it falls, we might see it falling to this support here, right? As a first. So this is very possible. Keep an eye on it. Whatever you do, you want to take a long position because of the interest rate cut and the strong bullish momentum on gold right now, but an entry at this price is definitely not safe. So keep an eye on it, wait for a retracement, get a confirmation from either these two levels. And if you enter here, right, make sure you don't go very big in the lot size because there is a good possibility, as I said, to break down. Why? Because we can see there is a strong bearish sentiment by approaching this resistance. And notice that even though there is a huge bullish momentum, the price did not reach to the resistance itself, or actually the highest price of the resistance, or the highest small range of the price movement. And then we find this bearish drop. That means that there is not enough fuel to break above the level yet. So this is why liquidation is very possible. I'm giving you guys an understanding of how markets really work. You really want to learn trading, just come to Zylostar, man. We'll give you every information just as I'm explaining this, and you'll get the picture in full details. That's about gold. Let's go into Nifty 50. Looking at Nifty 50, also as we had anticipated in the past week, we were anticipating a retracement to the trend line, and this is exactly what happened. We got a confirmation for a long entry, and market did start moving up. So here's what's happened on Nifty 50. There is this uptrend going on, so a possibility for a break above this all-time high is very, very, very possible. You want to trade Nifty 50? Actually, Nifty 50 for the past few months, it's been a very, very easy and good asset to anticipate, trade, and make some money with. So keep an eye on it, and definitely if you want to go for a long position, I would recommend that. And keep, of course, risk management is king. So that's about Nifty 50. Let's go into Bitcoin. All right, looking at Bitcoin, just look at it. As I had highlighted in the past week, Bitcoin was better to stay away from it. And I told you there's slightly some bullish momentum on it. So you can see overall, it is moving up slowly. However, recently, we are having it consolidating within this range. So there are actually big jumps and big drops, right? However, if you look at it, we had an inverse FVG, and this is, they call it the V reverse pattern, which is a little bit more common in crypto, to be honest, and sometimes in stocks. All right, we don't see this as much in Forex, or maybe because I don't follow up with every other pair, whatever it is. So we can see that this fair value gap is still holding, right? It's still holding pretty well. And if you look at it also from a bigger perspective, we are getting a ascending triangle. So this is also another bullish another bullish reasons. Hi. So what you actually want to look is you want to look for a bull entry once we get some confirmation from here by the start of the week. Of course, keep your risk management there. We might see an attempt to liquidate those guys, go to this trend line, right? Because Bitcoin loves liquidity like we love you. And then we can see a breakout to this resistance in a medium time frame. So that's about Bitcoin. Let's go into Euro USD. Euro USD, also as we had highlighted, I'm kind of getting bored saying as we had highlighted, I'm just telling you guys how good quality the analysis we are publishing. So if you haven't clicked that subscribe button, what are you waiting for? This is actually free intel for you to generate an extra income without you knowing anything about anything. Just have an account, get the information, go into the trade. Okay, of course you need to know more about risk management and psychology. That's why you need a mentor. Anyway, so we expected a retracement in Euro USD, and this is exactly what happened. Well, we expected a lower, at least a little bit lower of a retracement to the support. It didn't reach out to that because of the expectation of speculators for the interest rate cut that actually came down, and this is what caused Euro USD to break up. So you can see we have it as in a perfect uptrend. Perfect uptrend. Also, Euro USD has been very, very good for trades for the past 4 months or so or something. I'm not really good with dates all the time. Dates as in numbers of historical events, not dates as in with women, all right? Don't judge me. You can judge me, actually, I don't mind. All right, so what we have here is we have a bull flag, all right? So we do have one of two scenarios. There's a good confirmation here, and market right now is at a very, very, very good position. So here's what can happen. You can actually go for a long trade right now, right? Put your stop loss just right below these lows. And this trade, most likely, there is a very, very high percentage that it will lose, okay? There's a very high possibility that it will hit your stop loss. But if it doesn't, this can give you an easy 1-to-3 risk reward ratio, or actually more than 1-to-3, because of this, market can go to here. So this, if you put your stop loss here, we're speaking about 1-to-7 minimum, right, as a risk reward. So this is a fine opportunity. Now, technically, which is the right movement and the correct movement of markets, we should see that Euro USD is actually attempting to retrace the trend line, go to the support, right, possibly take this low, right, this support, and then continue in this uptrend, all right? So this is a healthy market movement. If it hits your stop loss, don't panic. It's a part of any business you need to understand how money works and runs left and right and up and down. No, they don't really run like that. They rotate in circles, not in directions. So here you can actually get a way better entry. However, there is a slight possibility that we might see a continuation, a volatile move by early week. So if you want to take this trade, there is a very high possibility it will hit stop loss. But if it doesn't, right, if it doesn't, you can make some good stuff out of it. Yeah. So reuse risk management. If you're gonna go there, distribute your lot size or risk tolerance into multiple positions and have different targets. So you have 1-to-3, 1-to-4, 1-to-5 maybe, instead of having them all at the same targets, because this movement is not going to happen 100%, right? We have a 25% to 30% this move might happen, all right? But if it happens, it makes you good trade. So this is how you trade. You get opportunities, you claim it, and see how it works out. And the more opportunities you get, you take, it hits based on your strategy, risk management, money flows. I just taught you what we teach here in a few minutes. All right, anyways, so that's about it. Let's go into NASDAQ. NASDAQ, currently it's like a battlefield, all right? So one of the biggest reasons why NASDAQ is actually going bullish is because after the legend Michael Burry said there's a bubble, big bubble that's about to pop up in AI because they're hiding a huge amount of cost on them. And actually it is a lot of cost, because if you think about it, let's go back to ChatGPT. When they launched the first version of it, they actually needed 10,000 NVIDIA, what is it called? Graphic cards. Yeah, I think graphic cards, GTX 1080, which they put 10,000 pieces just to generate ChatGPT 1, and they had to maintain those servers, people looking after it, etc., etc. There is a lot of expense on it, and it's free to use. All right, so this is just a simple example. Scale it upwards to everything that AI can generate, like robots. We are having robots run by AI nowadays. We're having cars. We're having multiple things happening. So NVIDIA comes out and said, this bubble is not there. There is no bubble, and actually they are very convinced and optimistic about what's happening in AI and the futuristic possibilities. So from there, people decided to believe in NVIDIA because the legend Michael Burry is old news, right? Last time he spoke was 2008, and now he came after about 20 years, almost 18 years, and saying that there's a bubble. So people decided to trust NVIDIA because of the, let's say, incredible success they've had since 2024, skyrocketing profit more than any other stock on the planet. All right, so that's why we had this optimism in NASDAQ. When the interest rate was reduced, we should have seen NASDAQ going up actually because of this cut, but it fell. Right? So this is why, guys, I tell you, I do believe in technicals because it makes sense for NASDAQ to increase. That's how usually it works, but it fell. And we had highlighted this in the past week. I told you we have some sort of bearish pattern. What is it? An expanding wedge? I don't remember what I drew because this happened recently. It was about like that, I think, something like that. Yeah. And I told you this is a bearish pattern. We should see retracement of the support. And this is exactly what happened. Even though we didn't have the fundamental reasons to support this crash back then, and even we have more confirmations why it should go up because the dollar now is weaker. Even your USD went up, gold went up. It makes sense for NASDAQ to go up, but technically it has to retrace, so it pushed down. Even Russell 2000 went up. So this was a normal breathe out of the market, anticipation. This is why, guys, you need always to have an idea of what's going on in the world fundamentally, and then put it with technicals. If fundamentals match technicals, so both of them are telling you buy, okay? This is when you want to buy. So this is exactly what you want to do. When you have an understanding of what's happening fundamentally in the economy, in the world, in finance, what's good to buy, what's good to sell, and you get a signal that this asset is good to buy, you want to combine that with technicals. If you rely on one of them, you can actually make it in trading, but it'll be very difficult for you to make decisions when it comes to trades that you can make a lot of profit from, where you take a lot of risk. So you need to combine those all the time together. That's my personal opinion. I'm pretty sure everybody who is experienced enough in the market will tell you the same thing. Right? So NASDAQ here was telling us you should buy, but technicals were telling you don't buy. So eventually it wasn't a good buy. So to trace now from this support, we're seeing a solid strong on the support. So we can expect NASDAQ to start moving up and attempt to break above from here, because now dollar is weaker, people will want to invest in that, etc., etc. All the story we have highlighted in the video. So what's left now to speak about? We've spoken about gold, Bitcoin, Euro USD, Nifty 50, and NASDAQ. I think that's it for today, or this week rather say. You guys have any comment, any question, any, let's say, controversy where you think something is different, just type it down in the comment below and we will get back to you on it. Or if you have something you guys want to know more about, like silver or some certain crypto, altcoins, whatever it is, just tell us and we will highlight that in the next video. Samer Raslan was here. I'm a technical analyst, a senior technical analyst at Zylostar, and welcome aboard.
Thank you, Samer, for the insightful information regarding the technical analysis. Here in UK, we haven't seen the sun since 2 weeks ago, and today we are lucky. Here is Amir Amidian, Master of Finance student in UK and also financial market analyst at Zylostar. Let's have a look what happened to financial markets in the last week and also upcoming week. As we are getting closer to the end of the year, central banks all around the world decided to pump fuel into the financial markets, which may lead to a massive central rally for the last 2 weeks of December 2025. Let's start our market update session with the Australia and the RBA latest meeting. The Reserve Bank of Australia left the cash rate unchanged this week, maintaining a restrictive policy stance as it continues to assess inflation and labor market conditions. Policymakers retreated that future decisions remain data dependent with no immediate signal of rate cuts and a clear focus on keeping inflation under the control. In Japan, the Bank of Japan said it will move carefully, keeping policy flexible as it watches inflation and wage growth. Officials made it clear that any rate move will depend on upcoming data, claiming expectations of any immediate shifts. In the US, we had the FOMC meeting, one of the most crucial events in the last week. This time, economic projection and the dot plot even made it to be more interesting and catchy for the market participants. Fed officials decided to cut the interest rate by a quarter point in the last week. In the economic projection, as you can see here, now officials' median expectations illustrate higher GDP and lower inflation for 2025 up to 2027. Meanwhile, the Fed funds rate and unemployment rate are anticipated to be steady. As we can see here, the dot plot graph also emphasizes on it. Jerome Powell, the chairman of the Federal Reserve, said the Fed will set rates meeting by meeting, keeping policy flexible as inflation stays above the target. He noted the economy is stable after the recent cuts, but uncertainty remains. Last but not least, in the United Kingdom, the UK GDP slipped by 0.1% in the 3 months to October 2025, the first drop since late 2020. Weak production and construction, especially car manufacturing, dragged the growth down. Let's have a look for the upcoming week. Next week is going to be a little bit crowded and packed with economic indicators and the central banks meeting, as we are going to get the latest updates regarding the Bank of England for the interest rate decisions, and also in the European Union we are going to get the latest refinancing rate by the European Central Bank, or let's say ECB. Worth to be mentioned, also other central banks such as Bank of Japan will release the monetary policy statement for the interest rate, and market participants are expecting 25 basis point interest rate hike for the yen in the Japan. On the other hand, we are going to receive the Purchasing Managers Index, or let's say PMI, for the different regions such as Europe, UK, and in the US. And at the end, don't forget about the inflation and the labor market in the United States, as we are going to get the latest update about the NFP plus ADP in the US. Let's see what happened for the non-farm payrolls in the US in the last month. Stay tuned with Zylostar. See you next week.
Thank you for watching us. Don't forget to like, share, and subscribe.